Welcome to tonight's special presentation, this week titled, How to Short Stocks the Successful Investor Way. My name is Todd Shaffer. I'm the manager for research here at VectorVest. I'm also an instructor and coach for the Successful Investor Coaching Group and the associated coursework. And tonight I want to share our approach to shorting the market or playing the market to the downside. Now, the stock market offers opportunities to profit in both rising and falling conditions, but we still need rules. Right? The successful investor coaching system, we begin with our bull market approach of buying rising stocks in rising markets, and then flip that on its head to sell falling stocks in falling markets. We call that going with the flow. In either case, the successful investor way is to employ a rules-based, disciplined approach to capitalize on market downturns with confidence and precision. Here's how we do it. I always like to kick off by sharing some resources, and tonight's no exception. So a couple special reports in the program. If you go into the program and go over to the Views tab, scroll down just a little bit and you'll see these special reports. Click that link. That'll open our directory, and if you scroll down from here, you'll see two special reports on shorting stocks. Now, you can also buy contra ETFs in falling markets, another discipline that we support, although not tonight's focus. But if I go back to the Views tab and come down to the Special Presentations button, let's search for content up here at the top and search on contra ETFs. Several presentations here. I highly recommend the one Steve Chappell did here on the 19th of August in 2022. That was a nice comprehensive presentation, but of course you can see there are many from which to choose. So let's begin with the end in mind. Everyone needs a plan, at least a trading plan, and that is no exception for us here. This is the successful investor trading plan for playing the market to the downside. All trading plans are built on three pillars, and in the case of our shorting plan here, those three pillars are when to short, what to short, and when to exit or cover those short positions. So in the when to short, well, we're relying here on market timing, right? So when we have a confirmed down call condition, and we have a red light in the price column, then we can take on short positions as long as the market continues to follow through to the downside and the stocks that we're shorting continue to move lower. For the what to short, we want to look for stocks that have steadily falling price with steadily falling and negative earnings per share. And we want to see those follow through, moving lower as we take the position. When we take those positions, we set our initial stop loss, or our when to exit or cover the position. We'll set our initial line in the sand stop at the value of the 20-day moving average, or sometimes use the prior pivot. We'll adjust those stops to further mitigate that risk and start locking in gains as soon as reasonably possible. And so the circular nature of that is when something finally stops out, then we'll look back to the market timing signal to see if we're still in downtrend and go look for another replacement short candidate. Rinse and repeat. So that is our trading plan. And unlike our bullish campaigns, we actually do close all of our bearish positions when we get a green light in the price column of the color guard. So this approach is a little more active, a little shorter duration, more closely akin to swing trading techniques than the position trading techniques we trade on the bull side. And for that reason, it may not be for everyone, but hopefully you can recognize that we're using the principles and the techniques we established in the successful investor bull market scenario and simply modifying it to fit in the bear market scenario. So let's take a look at what this looks like in the real world. When I'm coaching, I like to say nothing teaches like the real world experience. And so I took a screenshot of the color guard from our daily color guard report on the 22nd of October. Today being the October 24th. But what we saw on that night was that we were in a confirmed down call and we had a red light in the price column of the color guard. So that evening, we prepared to short positions. We went and looked for candidates, set up the trades, and got prepared for the next session. So if the next session moved lower and the stocks that we were watching continued to move lower, we would take positions that were following through on the next session. The 23rd, the market went up, so there was no follow-through. In this example, we had the similar situation here on the 16th, where we did follow through, but immediately saw an oscillation of the price light in the color guard back to green, which would close those short positions. So this is a much more nimble approach and a little bit more actively traded. But I'm going to use this date of the 22nd because it's the most recent example that I have. So that's the when to buy. We have the buying signal. We want to be prepared to enter the market with bearish positions the next day. And to find those bearish positions, the what to sell part of our trading plan, we have a search that we use in the VectorVest program. It's in the Pro Trader Searches group called High Momentum Shorts. Now let's move into the program and we'll go find that. So we'll come over to the Unisearch tool. On our directory of searches here on the left-hand side, we'll go to the Pro Trader group. Let's scroll down and we'll find High Momentum Shorts. And I'll push my toolbar off to the left. So let's do a quick review of some of the parameters we're looking for, because remember, we're trying to define or identify stocks with these parameters that are in downward price trends with falling earnings. So our first requirement is that the stock's relative timing score has to be below 1, so the stock is in downtrend. We also look for price to have been falling. A delta is a percentage price change. Over the last month and the last quarter, the price has to be moving lower. Our next, we look for the stock's price to be lower than it was the prior day, but be above $10, so it has room to fall. You'll also probably have better luck finding inventory to margin from your broker. We want the stocks to be on the major exchanges. We're looking for the stock's earnings per share over the last 52 weeks to be lower, a delta less than 0. Here, we want the price's one-day moving average to have crossed below the 20-day moving average in the past 5 days. Now, we modify that for Successful Investor. I'll show you that in just a moment. We want to have at least 250,000 shares of average volume, and we want the price to be below the midpoint of the day. Here's a sweetener. We look for the industry price also to be lower over the last quarter. So a weak stock within an industry that's also trending lower. Now, when I run that search on the 22nd, and if I shrink the parameters button, you see it found 3, 6, 7, 8 results. The modification that we make to the search for Successful Investor is we say, instead of the price having crossed below the 20-day in the last 5 days, we modify that to say the 1 day is currently and has been for at least the last day below the 20-day. So it could have been there for a day, it could have been there for 6 weeks or longer, right? We're not really defining how long it's been, it just currently is below that 20-day moving average. When I run the search with that criteria and shrink my results, I have many more searches or many more stocks returned because of that looser parameter on the moving average. So let's take a look at the search results by the numbers, as I like to say, looking at the VectorVest analysis. Now, all these fields are the calculated fields that the program had to run to do our searches. And if I keep scrolling to the right, we'll come over to some of that VST analysis. The first thing I'll point out is that the sort that we're using for these search results is RT times CI ascending. So we're bringing to the top of the list the weakest combination of RT and comfort index, short-term and long-term price trend. So you can see RT values, yes, very low RT values here generally. And CI scores, also very low. And indicative of stocks that are in downtrend, not to mention all the sell ratings we see within the stocks listed here. Look at the earnings growth rates, predominantly negative across the stocks that were returned. And again, generally, fairly weak relative safety scores. So weak stocks with weak fundamentals in downtrends and certainly down on the day-over-day price change, negative for all of these. The next thing we want to do is take a look at their graphs so we can visualize the trends of both the price and the earnings performance. And the graphs are going to help me identify the best candidates. So what do we want to see when we take a look at these graphs? Well, we'll start with a 3-month graphed time frame. We want to confirm falling price, falling earnings that is free of support in that 3-month time frame. Then we'll back out to 1 year to confirm that there isn't a support level that we missed in the shorter time frame. And we'll check earnings to make sure that we don't have an earnings event coming up in the near future. And by near future, I mean within the next 2 weeks or 10 trading days. And I always like to paint a picture of what we're looking for. So I pulled from the results the Robert Half graph. And here we see price in downtrend, lower highs, lower lows. Earnings, upper left to bottom right. No support level identified here. And we'll take a look at the earnings date on our real-time graphs. But this is the picture of what we'd like to see. Of course, it never lines up neatly, so we're going to have to make some artistic judgment here. So let's take a look. So that process begins when I come up to the top toolbar and just click Graph All. So let's begin by setting up our graph. The first thing I want to do is change my layout to the VectorVest Simple layout. And as I scroll down, I want to just put on price, earnings per share. Let's add a 20-day moving average. And let's add our technical indicator, support and resistance. So I should have a parameter list that looks something like this. Now here's where we have our first divergence a little bit from the bullish routine that we have for Successful Investor. We're going to shorten our time frame to just 3 months. And we do this because bear market moves tend to be shorter lived and faster moving than their bull market counterparts. We'll still check the longer time frame, but we're going to start here. Now, the other thing I like to do when I'm teaching this methodology is to break down the steps instead of trying to make you a chartist in one fell swoop. So the first pass I like to make is I simply look at the earnings per share pattern and make sure that I'm moving upper left to bottom right. We want falling earnings driving this falling price pattern ultimately. So I scroll through quickly just those first earnings patterns, and if I see anybody who's actually rising, then I immediately eliminate them from consideration. So AVT is not under consideration because earnings are actually rising. So I can make a note or just uncheck it from my list. So AVT and APD are calls. So everybody's tagged. I'm going to untag APD and AVT. So those will no longer be considered. So I'm going to right click on the tagged stocks and look at their stock graph from the right click menu. Now we've already looked at the earnings performance, so we can focus on the price action. And what we're looking for is stocks that are in downtrend, lower highs, lower lows, that are free of support. So let's turn on support resistance. And you can see that NXTT was in this nice downtrend, but it has really been moving sideways at this support level. I put on the high-low markers. So NXTT is a no. Celanese looks like it might be moving horizontally here. Failure to put in lower highs, lower lows, so that's a no. LI is right at support level. We see the line here. If I scroll to the back, you can see that support level coming in from this price action back here. So I want to wait for that to break through before I take a position there. CAL, testing support today, so a follow through tomorrow could be okay. I don't have any support at this prior swing low. MAN looks good. SM looks good. RHI looks good. Shoe Carnival, we're back in downtrend after that gap higher. Depends on how you read this. The machine's not picking that up as support, so that looks good. We're still in lower high. Let's see if we put in that lower low. Price is slowing a little bit there. Atlas Energy, IIPR, Matador Resources breaking below that support level. We'll have to check earnings here in a minute. That was kind of like an earnings move, but nonetheless a continuation of that downward price trend. LBRDK, Carrier, right above a support level. So I like to see we start protecting profits at about a 10% gain. So if that support level is beyond the 10% window here, it's at the 52-week low of 54.22. We're at 57.12, so not quite that 10% threshold. So CAR is a no. Let's go back into 3 months. I'm going to say no to AI. CCRN is a no because of the support. BTS looks good. WSO at the prior swing low. If we get some follow through, we'll break that low tomorrow. MIDD right at support is a no. So I've taken those off my list, and you can see my list of candidates is shrinking here, a little bit more manageable. As I right click, we'll come back to the stock graph of the remaining stocks. And now I want to back out to that 1 year time frame to see if there's some resistance. From that broader perspective, do I have some resistance that's happening over here on the left-hand side that I didn't see in my shorter time frame? So we saw that CAL is right at that support level currently. We see here that SM is just approaching that prior support, so SM needs to come off the list. IIPR is at 53.38 with support at 45.57. So that's more than 10%, so that's okay. You could reject it, of course, if you like. LBRDK just broke through support. So again, looking for some follow through of these guys. And so I had to drop SM. And for my final pass, I want to right click, look at the stock graph again, and I can do this from my 1 year perspective. Let's take a look at the earnings dates. Now I can confirm the earnings dates with my brokerage, but roughly they're going to come in the same time frame. So in other words, Cal had earnings on December 5th of 2024. We can anticipate they'll be somewhere near the 5th of December in 2025. We like to avoid those earnings announcements for at least 2 weeks. So if I'm looking at the date of 10/22, then I don't want to see earnings coming before November 5th. So let's put a date line on November 5th. So I don't want to see any earnings numbers ahead of that. So RHI, here's a good example, right? 10/22 from a year ago. Well, we just had earnings today. So RHI is safe now because they've had the earnings event already. Atlas has not, so Atlas has to come off. IIPR, close enough, I'm going to skip it. Matador Resources just had their earnings announcement, so we're safe. LBRDK has not, so we're going to take that one off. Nor has VTS, nor has WSO. So let's drop these guys off of our list, which leaves me with 5 candidates. So let's take a look at their graphs one last time, just kind of do a double check. The test here is we don't know which of these is going to follow through the best into the next session. So we want to make sure that we would be happy to own any of these. As I take another look at CIL, this is really a significant support level that really the stock has been retesting but not able to break. So I'm going to cull CIL from my list. Here's Manpower. Looks good right up to the hard right edge. Robert Half. SCVL, Shoe Carnival. It's not as strong a candidate, but I'm still be willing to own it or short it. Matador Resources looks good too. So I can write these candidates down or I can put them into a watch list so that I can easily review the list as the session opens tomorrow. Looking for follow through at about that 10 o'clock time frame or thereafter. Once the market is following through, then I can start looking for the stocks that are following through. Now, if these are our candidates, let's take a look at how we would manage them if we get filled and take the position. So I'm going to right click and go back into the graphs. My line in the sand stop will be the 20-day moving average of the price action. And I'll just snap a horizontal line to mark that. So I have this much space for the stock to breathe before I would stop out. If I make a gain of more than 10%, I'll start protecting at least half of that gain. If I get gapping or parabolic price action, I'll adjust my line in the sand stop lower to lock in those gains and mitigate the risk further as the trade develops. So there's my line in the sand stop for Man. There's Robert Half, SCVL, MTDR. So I said in my notes, sometimes we'll use the prior swing pivot instead of the 20-day moving average as our line in the sand. So let me set that up on Matador here to prove the example. So let's pretend we were at the hard right edge and we were planning to take a position here in Matador Resources if it followed through. If I use the 20-day moving average as my stop loss, it would be embedded in the current price action. So this is a case where I would raise that line in the sand stop above the prior swing high to give the stock a little bit of room to bounce. We call that giving it room to breathe. Inside the coaching group, the purpose of this portfolio is to demonstrate different techniques that you can use to manage your portfolio. And so part of this time we were taking half-size positions to demonstrate how you can mitigate risk by resizing the positions to half of their normal size. So that skews the results a little bit here, in that your net is going to be half of what it normally would have been. We also mitigate risk by only taking on 1 or 2 trades at a time instead of taking 10 at a time. And that lowers the number of trades. So with those disclaimers in place, this real-world example is the best data I have for giving you a feel for how the system works. So remember, each of these would be predicated on a confirmed down call before we started entering positions with red lights. But overall, in that time frame, you can see that we've had 40 trades overall. The average time in those trades, almost 13 days, 12.86 average days in each trade. The total gain from all of that activity, winners and losers combined, was $6,200 to the portfolio. We've had 25 winners, 15 losers for a 62% win rate. Our average winner has been 6.69%, our average loser 4.4%. But overall, a reasonable approach to making gains in bearish markets. And a nice tool to have on the tool belt should this market roll over in our current time frame. So the stock market offers opportunities to profit in both rising and falling conditions. Our successful investor coaching is not the only way to take advantage, but we offer it as a foundation on which to build a systematic approach of your own to sell falling stocks in falling markets. Ultimately, the successful investor way is to employ a rules-based, disciplined approach to invest with confidence and precision. Thanks for watching.